G'day everyone, welcome back to Pete's Investing Updates. We review the weekly progress of some sample blue chip stocks from Australia, US and Europe, and also some indices across the world, in particular China, with the Evergrande collapse. In this week's summary, we'll look at BHP, which showed a major drop in its share price again, and Volkswagen, and see how that's performing. If you want me to review our share price, put in the comments, I'll cover in a future video. As always, click on the subscribe button, the notification bell, and like the video to support the channel. Don't forget to review the playlists, and that's where we review our indices, share price review, and also the strategies we cover. And those strategies include a simple trading strategy we follow, the average down process, and some money management ideas. Again, we're not offering financial advice, but purely an educational journey. Some things to consider. We track and trade on a daily chart since we want to backtest and see results of trades back during the GFC as well as the COVID effects. We track and backtest revenue over drawdown requirements. That's a percentage to optimize our returns with less exposure. Brokerage is included in our backtesting. I used $8 per transaction for each time we buy or sell, and revenue shown may change depending on your brokerage costs. Dividends are not included in our backtesting, so for all revenue generated, we can add a bit more to the bottom line, which when dividends are paid out. And my backtesting transacts with $2,000 lots per trade. To increase revenue, that is the return, simply increase the revenue. Simply increase this $2,000 to $3,000 or $4,000, whatever you like. But be aware this will also increase your drawdown, so ensure you're factoring this with your money management strategy. So let's get started. First, I want to talk about BHP. As you can see here, after we did a couple of videos back a couple of weeks ago, it dropped down and went cut through this moving average 200 line, and it's been continuing a decline since, and it's actually done the same thing this week. That's what it's done this week so far. So that's not looking good for BHP, and again I'll let you look at the news articles for that to get a better understanding why that's performing so poorly. Volkswagen, that's been consolidating sideways for a few months now since the start of the year after a nice little spike, but it's approaching this moving average 200. Now, we don't trade on the moving average 200. I'm simply showing you that as a technical analysis tool, and we want to be able to trade above that if we can. We actually exit the trades when the moving average 20 is broken, such as in this case. So if you had to enter the trade back here, when the CCI 14 breaks above the zero, you enter the first lot of shares. Again, we're trading $2,000 lots of shares in each of these. The market declines enough, and by enough we mean from the last 100 bars, the high-low range of the last 100 bars, and then the moving average the CCI 14 breaks above zero again, we enter another lot. As you can see there, it entered two lots of $2,000, so we've got invested now $4,000 since that period. A nice little spike, and we close it out when the moving average 20 breaks into a downtrend. That's where you close out those two lots. So again, refer to our strategy playlist and our moving average and CCI strategy in terms of how we enter and exit the trade and how we enter the average down approach. Now, I also want to talk about the ASX 200. As you can see here, I've drawn a trend line at the bottom there, and if I remove that trend line, you'll notice there is the moving average 200. So it's actually tracking that trend line is actually tracking along with the moving average. So it's actually bounced off that. Now, I'm still not confident or 100% confident of that. It's below our moving average 20 close position. Potentially, it could have entered another position there when the CCI 14 broke above the zero, but the price fell again. Now it's approaching that CCI 14 again. I'd like to see it break that level there before entering the market. But if you want to strictly follow our strategy, you could enter at any one of these points where the CCI 14 breaks above. But you've got to have a bit of an iron gut to stay in the trade. And if it does fall down, then add more positions to the market if and when it does that. You can see here back in late 2018, 2019, it averaged down once. And since then, the market's been doing quite well, with the exception of the COVID period, where the price dropped on the ASX 200. But then it's been going and steadily breaking above that moving average line, as you can see there. Now, the other thing I want to mention as well as the indexes is the China market. This is the China index, the Shanghai 50. You can see here it's been declining gradually, and I've drawn two trend lines here. This downward resistance line, so a support line, is trending down across there, and also this support line here. It's probably most likely going to keep declining down to this support line, but let's see how it goes, and we'll probably know more over the coming days and even weeks in terms of what China does with the Evergrande collapse. Now, with the Evergrande collapse, experts are warning that the China company's failure could trigger global shockwaves, hence the ASX and the US market and other global markets. So we'll see. We need to follow the Evergrande, or the China market especially, but especially the Evergrande collapse story. Now, Evergrande is teetering on the verge of completing an unravelling. It's the second largest property developer in China and has around $4 billion in debt. And the Chinese government has warned it won't step in to bail it out in what some have warned is an approaching crisis of Lehman Brothers proportions. Evergrande is one of China's largest property developers and is responsible for more than 1,300 projects over 280 cities in China. And if you thought the Aussie property market was booming, it has nothing on China. Home prices in China has risen to be amongst the most expensive in the world, particularly in major cities like Beijing, Shanghai, Shenzhen and Guangzhou. To keep up with constantly rising demand, Evergrande kept taking out loans, and then the Chinese government got involved. The government introduced a range of measures to crack down on excessive borrowing, as well as moves to slow housing price growth. In the worst case scenario, a total collapse of Evergrande would ripple through the global economy. Now, the Evergrande collapse article is in the link below. Feel free to read it and at your leisure for further details. One other thing I want to mention as well is China's got a high reliance, or the Australian market's got a high reliance on the iron ore price, and that's the iron ore price. And you can see there that correlates very closely with the China market. So the iron ore price has actually taken a dump this year after reaching highs early in the year. It's been declining since the Evergrande China decline. So again, Australia's economy is very heavily geared towards the iron ore price. So that's it for today. Feel free to subscribe, click the notification bell to get updates, but very importantly, reference the strategy videos to get a better understanding of how to trade safely in this volatile economy we're in at the moment. Don't forget to hit the subscribe button, the notification bell, and get the video updates, and like the video to support the channel. Thanks, and see you in the next update.